Okay, good morning, guys. My name is Gavin Pannu. Welcome to Alphachain's Monday Macro Markets. Happy Monday, everybody. This is a live session, so if you have questions, please put in your questions in the chat room, and then I'll answer it as we progress. There will be a recording at some point as well. So there are going to be two parts to this session. One, I put a PowerPoint deck together, just covering some of the key snapshots or key charts that I've seen from this week and the prior week that have really sort of given me an insight to where I see markets going and what has happened so far. At the same time, whilst we go through some of these key charts, we'll also discuss how markets were from last week's session, and to also go on to the technicals now and have a look at the charts for the upcoming week. Let's start off with, markets last week, reacted exactly how I would expect markets to react under those risk-off conditions. So it actually stayed risk-off through most of the week last week. So now, what does risk-off mean? Well, it's where there is panic and fear in the markets, right? It's where individuals are looking to take less risk in the markets. Okay, so they're taking risk off the table. They're going into more safe haven and precious metals potentially. We'll come on that in a minute. But overall, during a risk-off condition, you will see markets are highly volatile. We're going to see equities not fare so well, whereas safety assets such as bonds actually rise in that mood where you see the sentiment going from very risk-on conditions to a flight to safety. Okay, so that's the key there. Everyone's moving from something that's seen as a risk-on asset to risk-off, which is a flight to safety trade. Okay, so let's have a look at the first chart here. So this is asset classes by year-to-date return. Asset classes by year-to-date return. One thing to indicate here is the fact that, I did not include the weekend open. So overnight, Sunday night open, have we seen the oil markets, guys? Have you guys seen the oil markets? We've seen a significant, another 10% gain just in the overnight session. Okay, so we see prices rising significantly, testing sort of the 130, 131 handle if we're looking at WTI crude oil. So oil is not only outperforming year to date, but it's outperforming this snapshot that I had taken Friday evening. I had taken this at the close of last week's session, but so far at the open, we're already another 10% gain in the oil markets. Certain commodities are outperforming. I will give a further breakdown to this a little bit later, but the commodity market is booming right now. Okay, and after a couple of charts that may sort of give you some indication where we see the commodity sector going overall. Gold back on the front foot, up 5.8% year to date. Gold is really starting to begin to shine anyway. The dollar also gaining with risk off flows, up 1.8%. Cash down at zero, of course. Government bonds, negative 3%, but if you look at the overall picture of how negative it had been, it's actually gained. It's actually sort of recovered some of those original losses from last year, the year before. Looking at investment grade corporate bonds at minus 5.2%. Looking right at the bottom, look at the bottom. Those are your risk on assets, stocks and Bitcoin, both down in the negative territory, even though we've seen, Bitcoin pass some of those losses recently. One of the worst performing equity markets last week was the DAX, your German stock market. Okay, the German stock market fared quite worse in comparison to US equity markets. Now, just to sort of give you a bit more into
the Russian Defense Ministry confirmed 6 humanitarian corridors are to be open.
Okay, so now what we're seeing is, just to explain this a little bit further, now that we have Russia sort of invading Ukraine, there's this continuation of dialogue that's taking place. This is having a significant impact in the euro, but also the European stock markets as well. And that's why we're seeing European stock markets fall substantially lower in comparison to US equity markets. So the brunt of the force that we're seeing is taking place in the equity markets, especially with the German market. Now, I do know is that most of the German DAX is now in the correction territory. Okay, so if we look at the charts, the German DAX is in the correction territory, just testing this morning the 13,000 figure. I'll come on to the charts in a little while. So what we're seeing here is the comparison, so a geopolitical risk and the stock market. Okay, so what we're seeing is, okay, where is the Russia ETF in comparison to a basket of Sweden, Finland, and Poland sort of stocks, as well as the S&P 500. You can see how the impact is. Now, we know that Moscow Exchange was closed the entire week last week. Okay, so they're trying to sort of negate any further losses, right? They just close down the exchange itself, right? So there's no trading involved there. But the Russian ETF is tradable. It is tradable. So we've seen the Russian ETF fall substantially, and then that's being followed by those basket of European stocks as well. So Sweden, Finland, Poland, including, this is not including the German market, but the DAX, I've just shown you sort of individual companies within there performing sort of negative 20% plus. But the S&P 500 doesn't seem to sort of have the significant or the brutalness of the sell-off yet. Now, here is something that sort of really sort of caught my eye from my weekend analysis review. So this is by a fund management called Incrementum. I think they're German based. They're German based. But what I liked about this is taking that 10-year rolling, and just reviewing the sort of the big term picture. Okay, yeah. So CAGR is compounded annual growth rate. Okay, so we're looking at the compounded annual growth rate of the US commodity price index, and this is of a 10-year rolling period from 1815 through to 2022, where we are now. But just looking at where we are, you can see how cyclical this is, right? How cyclical the commodity space is. But we are back at significant lows. Okay, so you can see sort of the first US depression. Then you have the long depression in 1875. I don't think we're going to go that far back, but if you look at the Great Depression, is one of the most important ones that I've done research on and analysis on, which was back sort of late 1920s. Yeah, and that's the one that most individuals will remember, not being part of it, but of course just reading into it. Then we have the Cold War era. And look at where we are now. So if we're moving into sort of where you see, look at the US Civil War, the post-World War I, Cold War, all these sort of war types of scenarios fares very well in the commodity markets. And that could really mean that the commodity markets are going to continue in this super cycle, in the super boom that we're going to see. And commodity markets are going to substantially outperform, not just for the short term, for a longer period of time. There was reports from UK politicians over the weekend who suggested that this war is likely to sort of continue for years. Okay, so there is indication leading on that this is going to continue for years of what's taking place anyway, from a geopolitical standpoint. But hey, if you're thinking that the commodity space is it overpriced at this moment, if you look at the compounded annual growth rate on a 10-year rolling view, I mean, we're far from it yet. We're far from it. Something else that was quite caught my eye from last week was the price of wheat. The price of wheat was astronomically rocketed to the upside, as you can see over here. Now, wheat prices is another commodity. It's a soft commodity. Not many traders involved. It's mostly traded on the futures market, but that can lead to sort of manipulation and some exaggerated moves that occur, and that's what we saw from last week's session. So that's the fear in regards to sort of the food production levels. Okay, so moving on. Okay, so last week we also had, being the first week into a new month, first Friday of each new month, we have non-farm payrolls. Okay, so we have the non-farm payroll release. and it came in higher than expected. And now this is the second time that we've been above the estimate. Okay, so you can see these two orange lines, the most recent sort of historical sort of bar graph there. And you can see how large of a gain that we've seen in the last few months. So now not only do we have this commodity boom, the war, and well, not the war, but the invasion of Ukraine is leading to a lot of the commodity sectors to really outperform. And then at the same time, we're seeing that the jobs market, the labor force in the US also at these record levels, okay, at these record levels. The only thing that's struggling at the current moment is growth. Okay, we're not seeing a lot of growth actually coming through, and there's discussions of a stagflation. Okay, stagflation meaning that you've got a high level of inflation, but not enough growth. Another key factor from last week is what we saw. Well, okay, so let's just do sort of a quick run through of the scenario with Russia and Ukraine and what had come through. Okay, so we know that overall, we're not in a war, or should we say a military war. We're not in a military war, we are in a financial war. That's the difference, okay? What's being attacked by, in regards to the Russians, is their capital markets. That's what's being sort of really being focused on at this moment. So we've got an escalation of sanctions and financial warfare rather than actual military warfare. Okay, so even though we're seeing this intensification of violence that's happening across Ukraine, but we don't have any other military that are stepping in at this point in regards to NATO. So what are these Western sanctions? Well, we know that the Russian ruble had nosedived substantially, right? So I do have a chart. I'll come on to that chart in a little while. Maybe I can bring that up there, right? So this is the Russian ruble. But I've gone a little bit further back. I went a little bit further back from 1996 through to where we are now. And you can see Russian ruble has been underperforming for many, many years, even though recently it's down about 40%. But the Russian ruble is down 30 to 40% from sort of during sort of this last few weeks. And what's taking place? So in response, right, we know that a lot of sanctions have been placed. What are sanctions being placed on? Okay, they've removed Russia's banking system from accessing SWIFT. SWIFT is where 11,000 plus financial institutions communicate with each other on a secure network. They have been removed. So the entire sort of banking system in Russia pretty much has collapsed, if you think about it that way, where individuals are running to ATMs, taking cash out, cash machines are not even providing them the capital that they need. So there is a significant concern. There's sanctions that are being applied in regards to that. That's the financial warfare I mean. Okay, so removal of SWIFT. We've seen oligarchs being targeted. We've also seen sanctions on specific banks and politicians and ambassadors that are related to Russia. So we see all sorts of types of sort of, ways of targeting Russia. But Russia are also are looking to sort of combat this. And how are they combating this? That's some of the key points that I wanted to sort of stress on. So let's start with, okay, Russia's central bank, firstly, it doubled its key interest rates to 20%. So its interest rate was reached around 9.5%. It's gone up to 20%. They also freed up local bank reserves to boost liquidity in the system, and banned Russian residents and companies from transferring foreign currency abroad. Okay, so they're not allowing individuals to sort of send their money abroad. The Moscow exchange obviously was closed, as I already mentioned, most of the week, last week. And that's to sort of shield the stock market from a continuation in that sell-off, right? At the same time, we do have credit rating agencies downgrading Russia to junk, as the risk of the country, going into default is extremely high. Yeah, and also we've heard just recently over the weekend how now exporters, okay, so the sort of a lot of Russia's sort of oil markets, being oils, oil barrels are being exported. So we know that, you know, they've got a high level of exports taking place. So those companies that are making payments to Russia, they need to be made payments in ruble, Russian ruble. They want to be paid in Russian ruble from all their any outstanding debtors that are involved with Russia. So those are some of the key facts that are around this as well. So just coming back quickly over here. Now, this is sort of a 1 week relative performance, only taken up till last week, Friday's close. And what we're seeing is wheat, of course, up 40%, heating oil, crude oil, 18%, palladium, corn. So we're seeing all these sort of commodities outperforming. Now, it's not gold that's only outperforming. If you look at the markets, there is a host of other soft commodities that are far outperforming than some of those precious metals. And then the other end, we're seeing equity markets, mostly Euro stocks, the DAX, a couple of, you know, coffee. I'm not too concerned about that. But if you're looking overall, you're looking at sort of equity markets, the euro, the pound wasn't doing so well either, as well as Euro stocks and the DAX. Those are sort of your weakest performing assets. Okay, and as I mentioned, Brent crude surges to highest since 2008. Okay, so look at where we are at this current moment. Brent, if I look at what I look at is crude oil, West Texas Intermediate. That tested a high of 131. Okay, 131. It just went past 131 handle. It's retraced to around 125 at this current moment. Now, I'm not sure if how many of you actually have heard of Bridgewater Associates, one of the largest funds out there. And at the same time, the founder of Bridgewater Associates is Ray Dalio. Ray Dalio doesn't really work from a day-to-day perspective with Bridgewater Associates anymore, but he is a philanthropist, but also a very insightful individual in regards to market conditions. And he's recently written a new book in regards to understanding the new world order. Right? So he almost believes that we're going into a new world order. Now, this is what he has suggested in his book. I'll probably share the link with you shortly in the chat. Is the steps, you know, it takes 18 steps to sort of change to one order to another order, right? So you have the rise, the top, the decline of the current order, and then the new world order system comes into place. It'll be good if you take a snapshot of this and let me know where you think we are at this current point. I'm not going to go through each component. I might do that in a separate webinar and give you a little bit more detail, but just have a look at sort of, you know, the latter part of this, the decline of from 13 through to 18, right? And see if this reminds you of anything. Large amounts of debt. Okay, large amounts of debts. Now, you know, we know that whichever market you look at, you know, if you look at the US debt clock, have a look at the US debt clock. Google search US debt clock, and you'll see how much debt the US has at this current moment. Printing of money, quantitative easing is something that's been occurring for some time now, but that was aggressively applied during the pandemic. Internal conflict, yeah, loss of reserve currency, okay, weak leadership, and then civil war revolution, right? So just sort of, you know, highlighting some of these key points over here, you can clearly sort of, you know, picture where we are at this current moment. And let's see what takes place going forward, right? You know, but hey, it's a fantastic book to look into. Ray Dalio's new book, I think it's called New World Order, something similar to that. I'll share the link shortly with you guys, but this gives you sort of a good insight there. Okay, let's go over to some of the charts. Let's have a quick look at some of the charts. Let me share a different screen. Let me move back to the screen over here. Right. Any questions, any recommendations of charts that you want me to review, let me know. But just give me one moment, guys. Give me one moment. Okay, so let's start with the equity markets. Right, so let's have a quick look at the S&P 500. Let's switch it up to sort of a higher time frame. So when the daily time frame, there is still overall weakness, but we haven't seen a new low being formed as of yet. A higher low has been formed, right? So you can see sort of the first pullback, retracement, and then a test of the prior high. It failed, and we're seeing now we're breaking that prior low in this case, but we haven't broken this key low as of yet. So we still need to get through the 4,200 figure, which is an important sort of support region at this moment over here. And if you're looking at the NASDAQ, quite similar price action as you can clearly see in the chart over here. So both showing that they're still holding themselves at these key levels here. But have a look at the FTSE 100 and the German DAX, right? See the difference there? You know, whereas these both equity markets, US equity markets, are still staying, you know, in the region of where those previous levels are, FTSE and the DAX are falling in one direction. Okay, sharp sell-offs taking place in. Let's focus on the DAX at this current moment. As I mentioned, DAX now not only through the 13,000 figure, but we can see sharply lower around 12,500 figure. You know, at this moment, you don't want to be trying to catch a falling knife either. So don't look to sort of go long and buy the dip. We're nowhere near a tip yet. We can expect more selling pressure coming through, maybe a pullback and another, you know, dead cat bounce sort of sell-off occurring. But we're you know, sort of breaching through a key level of prior resistance, which could have been support, but at this moment, no chance. We're sort of going on to sort of potentially test 11,300 figures sort of in this support region over here. Just highlight that as well. Take it to this one over here. So yeah, 11,400 figure in that region there. So we still have some room to this point over here. Switch it up. Let's refresh this. Coming over to gold outperforming. And I did mention this. Yes, last week was such a fantastic week if you're looking for a buying opportunity, because we saw this strong rejection candle here, right? Strong rejection candle over here. I said, wait for the retracement. Wait for the retracement. We had this first initial move to around the sort of 1970, 1980 figure. We had that. We had a sort of retest back to sort of the 1880 sort of figure. Okay. From that point there, it's just rocketed up. We're now making a new high. We are sort of on track to really go on to sort of test those prior highs that have taken place in sort of the middle of 2020 from the pandemic. That is, you know, we're going to see a sharp move, guys. We're going to see a sharp move occurring. You know, all of this consolidation that had taken place for a good couple of years, right? From sort of, you know, middle part of 2020 through to sort of last month, and just now recently just broken those highs. We're moving back to the upside. The next test is going to be back to the all-time high around 2073. And just looking at the oil markets, have a look at that. Is that a move or what, guys? You know, there's quite a few individuals sort of in this region here that assume that, okay, you know, it's forming some sort of widening formation. It's going to reject this level, but you know, when the trend is still intact, always trade in line with the trend. Okay, the trend is your friend, and it's just breaching through these levels so easily. You know, I marked the level at 100 figure, 107.90, 115, and we've just surpassed that. We're back at 125, and I believe I did mention this last week to you guys. There are market forecasters looking for a 200 price target, 200 for a barrel of oil, which has never happened before. You know, so the next sort of, you know, key level of resistance is going to be back to the 2008 highs. Okay, so 30th June 2008. Where you had price around the 146, 147 handle. So are we going to see price testing 150? The way it's looking, you know, it could be done within the next few sessions, right? In the next, few weeks, where the weekly time frame, it could happen with the next few weeks. We could see a potential test up to 140, 150. And this goes in line with what we're seeing from OPEC Plus not continue to ramp up production. We've only seen that they've released some of the reserves. The US continue to release some of the reserves. There's discussion over the weekend in regards to banning Russian oil, okay, banning Russian oil. And if that happens, we're going to see a 150 price target quite in a very short period of time. So that's where we are in regards to sort of the key macro chart here. Let's switch over. Let me just switch over to another chart. Just give me a moment. Share. Okay. Sort of coming over to looking at sort of the currency strength. So naturally, in a risk-off environment, you're going to see dollar strength, yen strength. So that's what we see at this moment. Dollar yen strength at this moment. It's on the 5-minute time frame, guys. So it's a much lower time frame. But euro sterling showing some weakness this morning. So at the open, we're seeing already sort of weakness in euro sterling, whereas a lot of strength coming for dollar yen. Dollar continues to sort of rise to the upside. Okay, so it's continue to push high. We're sort of going on to sort of potentially test the 100 figure at some point. It's already sort of almost sort of nipped the 100 figure prior to that. But yeah, it's pulled a retracement low. It's starting to sort of, you know, break those prior highs and make a new high. Not sure if you can see that clearly. But okay, US 10-year yield, looking at where it is now, it continues to fall, it's continuing to slide. It's around the 1.72 figure, reaching almost a high of 192, 191. The VIX is sharply moving higher, so we're back above 35. So we're still in elevated levels, still there's fear in the market. This is seen as a fair gauge, the volatility index on average on the sort of higher time frame. If I maybe sort of switch it up to maybe up there, that's what we can see, right? So on the sort of 4-hour time frame, you know, average, it's somewhere between sort of 16 through to about 20. That's where most of the time it stays. And then you have spikes in between. And these spikes are when there's uncertainty in the market. But it doesn't seem like it's just a spike now, right? So often in the spikes that have occurred previously, you see a spike and then it sort of comes back and sort of calms down back to sort of those key levels, right? Around that's below 20. But at this moment, we're just moving in one direction. This is almost forming its own trend. Okay, we're seeing the volatility index forming its own trend. We're not quite at those elevated levels that we saw sort of, you know, with the pandemic occurring, which, you know, where we saw strong spikes sort of up to those 80 handles. But even though we're seeing equity markets really begin to sort of show some significant weakness, but we haven't quite got to those elevated levels. So we could see a sharp rise. We could see a continuation in this. But yeah, I mean, we are at these highs where we've not been for some time, or the most of 2021, right? Switching over, let's look at euro dollar. Just looking at let's look at the daily time frame. If I just, yeah, so euro dollar, one of the key levels that we surpass through is the 110 handle. Okay, so we surpassed through the 110 handle. We breached through the 110, testing the we went through 109 now. We're at 108.63. And just looking at sort of where we are now, just looking at this trend line in place. That's where we're testing. This is the key level that we're testing at this moment here. And so we've got two strong key touches on the sort of daily time frame. We're testing this level at this moment here. Are we going to see a continuation to the downside, or are we going to see rejection, bias at these lows? Let's hit refresh. Whereas looking at cable, yeah, I mean, it's been in a very nice downtrend, We had a much larger correction when we first got to this region here, and this region being around the 131 handle. Okay, so 131.50 handle, 131.60 handle. It's retraced significantly from that point up to the 137 figure. It's now back at this key level of support. Again, another fantastic potential trading opportunity looking at the daily time frame, retesting a prior level support. If we breach through this level, you're looking for other key levels of support, maybe back to the 126.60 handle in this region over here, and then back to sort of this key level of support. But again, I mean, this is a daily time frame. I'm not going to be looking to have sort of price target anytime soon to this low. We'll be looking to sort of the next key level of support in this region here around the 126.80 handle. Yeah, but a very, very key level, right? So again, we're sort of testing a very prominent level, and markets consolidate for some time in this region here. We're back at these lows. Dollar yen, let's have a look at dollar yen. Okay, dollar yen. Now, this is the thing. I spoke about this previously. Just checking the time. I spoke about this previously. Now, dollar yen is a great asset, but when you have risk off and panic in the markets, you're not going to see a lot of movement occurring because they're both quite strong. They are both quite strong. So there's almost going to be a balance between the two if you look at from a currency strength perspective. There's a lot of demand for the yen. There's a lot of demand for the dollar. Therefore, this currency is going to consolidate in this region here and balance out. So it's not the asset that I'll be looking for trading opportunities. As you can see, so it's in this range. Overall, a very strong uptrend if you look at the 4-hour time frame, but most recent price action, especially sort of if you look at the last month or so, right? We're seeing sort of mostly convergence and in a tight range. And then finally, looking at sterling yen. Let's refresh this. Yeah, so look for which way you're going to see the best opportunity, right? Sterling yen, I like the volatility that's involved in sterling yen. It's one of my 4 FX pairs that I trade. Sterling yen's again moving to the lower, to the downside. On the 4-hour time frame, you have 3 of these indecision candles. So there's a bit of balance there around the 150, 150 handle. Okay, so 150, 150 handle. Now we're surpassing through that region over here now. So there's more selling pressure coming through. Okay, and that gives you a quick overview of where the technicals are in markets. I'm seeing plenty of trading opportunity, a lot of volatility. So take your precautions when placing your trades. Have wider stop losses, reduce your position sizing slightly. Yeah, those are sort of the 2 key points that I would probably stress at this current moment. And don't be eager to rush into a trade Monday morning. Okay, it's the start of the week. It's the start of the trading week. Be patient, be cautious, and trade well. Thank you for joining in this session, guys. Take care.